One of the most important skills to pick up whilst trading is reading price action. This gives you an idea of the potential market move as we go forward. There is no crystal ball, there's no guarantees in the market, and anything that we look at here also could be just, it could fail. So if there was guarantees the market, there wouldn't be a market, because everyone would know exactly what would happen next and no one would want to be on the other side of it. So let's have a look at price action. And what I mean by price action, there's two aspects of price action, and one could be the micro side of the other in effect. So firstly, in terms of price action, I'm looking at the way price moves in waves. Now, I don't care if you want to go into detail on waves. That's another subject altogether. But this is the general way markets move. This is a downward sort of move and an upward move, maybe like so. Each of these periods around the retracements may be completely ugly. I mean, there was a retracement here. Look at how ugly it was for quite some time. It just actually consolidated sideways before pushing up, eventually failing in terms of the bigger trend. So the important things to pick up, and you should take a chart back and start reading it, is to literally identify when the weakness sets in. The clearest point is when we get a lower high on the downside. And the weakness of the strength, or the upside, sorry, is a higher low. So it's when price action, when you get the first higher low in, and then it looks like there could be a continuation. We don't know how far it will go, but what we do know is the probability is better. If you're looking at trading in a long-term trend, then well, the easiest route, if it's to the downside, is trade it to the downside, and vice versa. So reading the price itself, what we've got here in terms of we've got an initial high at the very top here, and then price has moved down, it's pulled up and then broken the low here. When it breaks that low, it's given us a lower high, and it's effectively locking in a lower high. That is the sign, and this is the point where the market is easier identified as being weaker. It might give short-term signals, it might even give in the lower time frames signals up here that it's weak. That's fine, we can look at those, but the clarity comes in the time frame you're looking at, the time frame you're trading off, is when you see this lower high put in. There's no guarantee it's going to, as I say, move on miles, but that is the point at which you've got a lower high and suggests weakness. We've obviously got a low in to start here, then we've got a lower low as it's broken the previous low. So as it breaks that low, when the low comes in and we push, that's the lower low, it's pushed up here, and once again as it breaks this level here, it's given us yet another lower high. So we're effectively trending on the downside there with lower highs and lower lows, and that's a downward trend. So that's reading it, looking at this is the sort of the guaranteed point. I say guaranteed points, but the points at which the market is really showing its weakness. If it was to put a double top in, well, double bottom in this case, well, something else happens, but that may be the case. However, when it's breaking down like so, often people will look at it and think about it as a divergence even on this movement here, but what you've got to realize when it's done it is particularly for the first time away from a high, if it's been tracking up and it's been moving up quite strongly, the first time it's doing that from a high, chances are it's not going to be a divergence for long, it's going to break and continue onwards. Just a slightly higher probability on the first one in particularly. Okay, so then upside, just looking at the upside, what we've got here. So if this was a low coming from a bigger trend, or this trend here even, but you've then pushed up, pulled back, and as you break this level here, this high, you've then got a higher low. So there's a low and then you've got a higher low. Very simple, but very and easy to read once you get your eye in. As it breaks up here and does it a second time, of course you've got another higher low and a higher high. So you've got a higher high here. So you start moving through higher highs, higher lows. That's a bullish direction. Lower highs, lower lows is a bearish direction. So that's reading the price. So actually, as you read it, let's just go into looking at this price action that's been running here for God knows. This is a daily chart. In fact, let's just go to a weekly chart here. And you can actually see as it's sort of breaking down, it's pulled back up, then broken. There's a lower high from this one. In fact, I've purposely marked these because these themselves are showing us lower highs. Let me just get a different pen in here, so I can get a trend, a straight line. There we go. So we got the highs there. This one's coming low. Now on the break of this, horizontally, on the break of this, at this point here, this is confirmed as a lower high, and the direction of the market at that point is more likely to continue to the downside. And that's all we're looking for, is likeliness, not guarantees, but it's more likely to do so and to continue in that route. And the distance, well, often we look at prior lows here. We look at other targets. It might have other targets to go for, but each of those is an opportunity. Each of these lower highs coming through. So this is a lower high as we've broken this point here. So we effectively, as it broke round about here, it's popped up and given us another lower high, and so on. There's another one here, a smaller one, and you've pulled up. It's pulled up away, and it's sold off. And there's another one. How do you read them? Well, the lower highs guaranteed rolled in when it actually breaks the previous low there, and that's given that as a lower high. Now what happened in this particular case is just the way the markets go. Sometimes it'll break, it's gone and given you, tick the box to say there's lower highs there, and then it's rallied for a short time, probably taken out some stops at the top here. That happens occasionally, but then broken down again. And as it's done so and broken this level over here, and then we've got yet another, effectively another guaranteed lower. I say guaranteed, but another actual lower high. So there's a way of reading through the markets and reading them and picking up where things are running. Right, now I'm just trying to clear this this pen with the wrong side. Let's clear that off and pop that back on. There we go. He says let's clear it off. Is it going to clear? It's not going to clear at all. Just one moment. Phew, eventually cleared it. Okay, so second part of reading price action is looking at it in a little bit more micro point of view, a smaller time frame. But you can still do it off of the bigger time frames. So we're looking between this point and this point, and we're looking at the price action then, reading it from a candle point of view. So the candles themselves give us a clue of what's going on the higher time frames. This, when you start coming down the time frames, may show you something in more detail, might even give us a lower high at this point. The signals may already be there. Certainly over here you've had effectively a shooting star candle, where effectively it's showing you the price went up, couldn't hold on to it and came off. Didn't sell negatively, but still it's a sign of weakness. And then we've got a doji bar next to it. It sort of managed to push up, but it didn't close too far either way. The price action was showing the status quo. And then we've got a spinning top. It's a slightly bigger version of a doji. You've got a bit of a body in between, and then another shooting star. So all these bars here were showing us, and with the wicks on the top there, was showing weakness. Now it doesn't. This is on a weekly chart, so you can work off this sort of time frames and work out what's coming down. You can do this off of many multiple times, so frames. So you could be looking at a 4-hourly picture, go down to the hourly on 15 minutes. I'm looking at a weekly here, and we'll go over and look at what the dailies were doing at this time, so we can do that. I've put the markers on there, so let's drag this back. That's the second one. There's the first one. So the first one, what was it doing? Possibly some divergence over the tops there. Not massively clear on anything else apart from some divergence. So the price action, it pulled back, pushed up, and then failed. So and consolidation that we've seen there, and then it's rolled over, pushed down. And of course, when it's done this, it's in effect it's given lower highs on its way down. If you looked at this area here on a lower time frame, this is on a daily. If you came down to the lower time frames, you'll see that on the breakdown here, it's given a lower high. In fact, there's a better way, rather than tell you about it, let's show you it. So if we can scroll all the way back, he says it's a long way back now. I'm going to pause this and find it. Okay, just resuming this. Okay, so this was the first line. The line is based on a weekly, and it's just showing it on the first part of the week here. So it's showing what was happening, the line here. But the important thing is looking down the time frames and what was going on. In fact, on the bigger time frame here, all in one day, this price action happened, and if you can see, this high here was lower than this one, and we broke the lows there, giving us a lower high. So from a weekly chart, we're seeing one thing. Okay, it's not giving us so much of a clue on here. When we move forward in a moment, you'll see much more of a clue in terms of the lower time frames and what was happening. And as I said, it's reading the price. The clues are on the weekly bars, but then you can zoom down and see some of the detail below it, what the weakness really looks like. Let me just now move on to the next. So before I actually find it, I'll just switch this back to a weekly chart. So this was the next move here, and we'll look at what they're doing. As I said, I've given you all the details behind the bars themselves and the weakness. Let's go down and zoom down. In fact, we'll look at it from a daily point of view first. So we'll go and find that area. There's the area, and again, look. So it probably had some divergence into here. Look at the price, and again, read the price action and get a feel for what it's doing here, because on a strong impulse, your retracements are quite shallow, and the price action pushes it back. As the market starts running out of steam, you start seeing this sort of ziggy-zag sort of movement and a bit of divergence. Of course, you may be getting multiple divergences through these points. On the bigger time frames, you may be seeing those. But either way, there's certainly weakness when it starts pulling back like so. The bigger moves here. Okay, it was running out of steam. You could be drawing trend lines on the bottom here and watch it run out of steam. Either way, it's showing you the weakness. Now, if you're trading off the bigger time frames, this really doesn't matter. All this, it shows you the weakness. It just gives you a better case. But you're then waiting. I've got a trend line already on here. A line at this sort of level. This would be the level where you start breaking. It's confirming the lower high from this point here to here. So all those candles that were appearing and the shooting stars and everything else like this on the weekly picture, when you come down and look at things on a daily picture, it just confirms the weakness in the market, and then you've got this sort of a secondary breakdown down, oops, a bit lower than what I've just drawn it there. We're giving us another lower high. So there you go. I just thought this is as far as I'm going to take it on here, because I'm running it into 14-15 minutes. I thought I'd do that in 5 minutes, but it's just really to give you an idea of the picking up one time frame. Look at the bigger time frames that you're trading in. Maybe if you normally trade on the 4-hourly, go back and look at the dailies and see what's happening, and see if you can see things happening from there. Get to look at what's happening on the main impulse trends. When it starts getting choppy, look at what's actually happening. Look for the candles, then go down to the detail of looking at what the candles are doing. You've literally got up down up down. It certainly was suggesting there's selling pressures coming into this market at that point, and then we pushed up. As I say, there will be a divergence across the highs there, and off it goes. So just get used to reading that. And even on this short term, look, a shooting star, that's not a good reason just to sell on its own. But when it comes the whole pattern starts giving you lower highs, it's just sort of confirming that weakness that's applied there. Now you just got in here effectively. If we can bring the weekly chart back, so you've identified some weakness, and you're actually potentially getting in where this white line is, relative to waiting for it to actually break the way down back here. So it's more of an aggressive bit of price reading to get in. Now this might have been your first target, ironically, down here somewhere, maybe in a first target somewhere around here to lock some profit off. You might, as it starts coming back and breaking the lows again, think, well, actually I'm going to get in with this and start riding it. So there's options on the exits, but certainly on the entries there's also some options there to get in from the aggressiveness of the lower time frames, or indeed just wait here for the more conservative approach and waiting for it to break on the higher time frames. At this point, I hope you find this useful. If you like these sort of videos in terms of finding out what really goes on in the markets, etc., do give me a like, and also do subscribe to my channel. Bye for now.